I bought a house when I was 26 and fell immediately into poverty. Okay, when I lived with my parents, I was living my best luxury lifestyle. I bought my own house. That first mortgage payment came in and I was like, oh, this is a situation. But at first you think you can handle it, right? Like, what's a couple thou? What's a couple thou? I got it.
Buying a house is a huge financial milestone. You have officially crossed the finish line from renting into the world of equity, tax benefits, and maybe even a backyard where your doggo can live its best life. But before you pop that champagne, let's have an honest conversation about what buying a house actually means for your finances. If you are not careful, you could end up being house poor. So let's continue watching this TikTok video of this lovely lady for a moment.
The pipes in my 80-year-old home broke immediately as soon as I bought the house. Wiped out my savings. Then another pipe in a different area of the house broke. Okay, I'm struggling. Okay, I need help. And then my water heater broke. When I tell y'all, I went from living in the lap of luxury to destitute immediately. When I tell you I was struggling, I had to go to my parents every other day for dinner because your girl could not feed herself.
As we just saw this lady articulate, she just bought a house and she said that she became house poor. So what exactly does house poor actually mean? Well, simply put, it is when you have purchased a house, but your monthly payments, like your mortgage, your taxes, your homeowner's insurance, and of course those unexpected repairs, they eat up so much of your income that you are left just scrambling to cover the rest of your life, like groceries, fun weekend plans, or even just those emergency savings. You are basically trapped by the four walls that you worked so hard to buy. The wild thing is, this happens more often than you think, and it can be caused by a few different things. Sometimes it's not even about the house being too expensive initially, but the ongoing upkeep and unexpected repairs, well, they drain your savings. Other times it can be caused because buyers spend more than what they are actually comfortable when they are creating their initial budget. They oftentimes will get pre-approved for more than what they are actually comfortable paying, and they stretch their monthly budget beyond what their lifestyle can support. But here's the thing, you can totally avoid this if you go in with your beautiful eyes wide open and shining and a strategy at play. So let's break down step by step how you can avoid becoming house poor. And as we go through these steps, I want you to tell me down in the comments if you think my insights are totally spot on or if I've just missed the mark entirely. Tip number 1 is to factor in the invisible costs of buying a house. There is so much more to homeownership than just a monthly mortgage payment. There are property taxes, which can rise over time. You've got homeowner's insurance, which can rise over time. You've got HOA fees if you're in an HOA community, which can rise over time. And then, of course, you have unexpected repairs and yearly maintenance. And we're not talking like $20 here or there. We're talking replacing an HVAC system or fixing a roof, and that can cost thousands of dollars. Also, it's an undeniable fact that things will break after you move in. It could be something small, like a little leaky faucet, or something massive, like burst pipes in the winter time, like this girl in the TikTok video had. Home ownership means being prepared for those moments, and sometimes the costs can really snowball out of control. Compared to renting especially, those costs can feel incredibly overwhelming. When you are renting, your landlord typically covers things like property taxes and any major maintenance items. But in contrast, as a homeowner, you, my frosty friends on the internet, are responsible for all of it, the whole enchilada. There is no one to call when the AC breaks down in the middle of the summer and it is just so freaking hot out. Now, unlike rent payments that often will increase over time, year over year, without really actually adding any value to you, your monthly mortgage payment, it will help you build equity over time, which is why many people say that buying a house is a solid investment for the long run. One of the best ways to curb these unexpected expenses is to invest in a thorough home inspection before you buy the house. Now, a professional inspector, they can flag issues like faulty wiring, foundation cracks, or just like aging appliances before they actually become your financial burden. While these inspections do come with an upfront cost, they can save you from any surprise repairs later, and in the best case scenario, you can often get the seller to contribute financially to these issues before you even close on the house. Now, that last point is like supermarket specific, so chat with your local go-to agent and see exactly what is typical for sellers to do in your market at the time that you are house shopping. Even after you purchase your house, regular maintenance and seasonal checkups like cleaning your gutter, tuning up your HVAC system, they can prevent or help prevent costly emergencies. Tip number 2 is to know your real budget. Not what the lender says that you can afford, but what you can actually afford based on your desired monthly payment. When a lender pre-approves you, they are oftentimes going to give you like your absolute max that you can borrow, not necessarily what is healthy for your lifestyle. So just because you're pre-approved for a $600,000 house doesn't mean that you should spend $600,000 to buy that beautiful house. But let's get even more practical and finite here. Take a hard look at your current spending. Do you love your daily oat milk lattes like I do? Do you travel a couple of times a year to Mexico to that all-inclusive resort like I do? Do not just consider your fixed costs today. Think about changes in your financial future. At the end of the day, your house should not crush your quality of life. So to avoid overspending, create a comprehensive financial plan before you actually get to the house hunting part. Tip number 3 is avoid FOMO. FOMO stands for fear of missing out. And honestly, it took hold of so many people when interest rates were super low a few years ago. So this next year, we might still be in a competitive market in some areas, and it is so incredibly easy to get caught up in FOMO during bidding wars and highly competitive situations. You tell yourself, it's just $30,000 more, I'll make it work. But those small overages, they can lead to hundreds of dollars in your monthly payment and significantly increase your overall mortgage over time. Bidding wars can be emotional landmines that just make you feel so pressured to act quickly instead of strategically and carefully. I totally get that sometimes bidding wars are absolutely necessary in certain markets. But again, this is why you need a good local agent who knows the norms in your market. Otherwise, you might just assume bidding wars are still common, and well, because FOMO has a grip on you, you make a bad decision. And if you're like, wow, I really wish I had a good agent to have my back in this whole entire scary process of buying a house, if you don't already have an agent, you can use my network of agents who are amazing and don't want to see you house poor. You can find links in the description down below to get connected with a referral agent that I know and trust for you. And BT dubs, if you're moving to Salem, Oregon, definitely hit me up. Okay, let's get back on track here. So to avoid FOMO, it is incredibly important to go in with not just a budget, but a bidding strategy based on your market if you are in a highly competitive market. Understanding the true long-term cost of increasing your offer will help you make an informed decision and is part of the reason why having a good lender at your back is so important. If you don't yet have a lender, that's okay. You can use a mortgage calculator to see exactly how a higher bid will affect your monthly mortgage payment in a hypothetical situation. Tip number 4 is to set realistic expectations based on your budget. And this is affectionately what we call having a beer budget with champagne taste. I get it. It is easy to get swept up in the dream of buying your perfect home, but it is so incredibly important that you stay grounded in what your budget can actually provide you and buy you. If your budget more aligns with a cozy starter home than a sprawling dream house, that's okay. It is your financial health and happiness that matters most. Do not overstretch yourself. Start by identifying your must-haves, your nice-to-haves, and your deal breakers so you are not overextending yourself for features that you don't even need. And be honest with yourself about these trade-offs. Do you really need an extra guest bedroom if it means stretching your budget to its limit? Setting realistic expectations from the get-go will ensure that you are looking at homes within your financial range, and it'll help you avoid falling for something that strains your finances. Keep in mind that setting realistic expectations can help reduce your stress overall. When you have a clear understanding of what your budget allows, you're more likely to feel confident and satisfied with your purchase rather than second guessing your decision after the fact. So the solution here is to define your budget clearly, prioritize your needs, and work with your local real estate agent to target houses that align with your financial and lifestyle goals. Tip number 5 is exploring financial options and mortgage types. We are just so adulting today. And for this point, we are not talking about FHA, conventional, VA, those types of loans. We are focusing on the different rate types of loans. So we've got fixed rate mortgages, which offer a consistent monthly mortgage payment, which makes it easier to budget in the long run. And then we have adjustable rate mortgages called ARMs. And these typically start with lower rates, but they increase over time. So you might want to also explore first-time homebuyer programs and grants, because many states offer down payment assistance or tax credits, which can help you reduce any upfront costs of buying a house. Do be mindful, though, that a lot of these programs make homeownership more accessible, but they oftentimes come with their own set of pros and cons, just like everything else. So for example, while some grants are going to be forgivable loans, others might require you to live in the house for a specific period of time, so you avoid repayment. Some assistance programs may also limit the type or the price of house that you can actually purchase, which could of course, narrow your options available to you. Pros of these programs includes lower initial costs, which of course makes it easier to save money for other expenses like buying that dining room set that you've been eyeballing. Other cons might be introducing new restrictions on eligibility, longer approval processes, and just limitations on how you can use those funds. Another key factor is going to be understanding how your down payment affects your mortgage in terms of a few different ways. So a larger down payment can lower your monthly mortgage payment and help you avoid private mortgage insurance, otherwise known as PMI. While smaller down payments through some of these programs, they might increase your overall loan costs. The solution here is to really just research different mortgage products, not just the loan types, and speak with multiple lenders to find the best fit for your financial situation. And do be mindful that not all lenders are created equal. So here in Oregon, we have very specific types of first-time homebuyer programs and certain assistance programs that not all lenders work with. And so that's probably the same as whatever state you're in as well. Not all lenders are created equal. It's important that if you want to go after some of these first-time homebuyer programs or grants, you are shopping around for different lenders that are connected with these different state-backed loan types or products. It's in your best interest to be working with a lender who can provide ample options and explain these terms clearly. So read the fine print on any of these homebuyer assistance programs to ensure that you have a very clear understanding of the long-term requirements and the benefits. Buying a house this year can be an amazing move for long-term wealth. After all, it builds equity. It gives you stability and can even feel empowering when you know that it's yours. But owning a house should not mean giving up your freedom or feeling like you're just constantly broke. The key is to make sure that your new home serves you and your lifestyle not the other way around. Walk into the process armed with knowledge, a budget that works for you, and enough cash flow to live your life beyond just your mortgage payment. If you enjoyed this video, you are going to want to watch this one next. Bye, friends!